The Hong Kong ETF is live. CNBC is flooding Bitcoin. The economic calendar for this week is a little bit interesting. And then we also got to look at the Bitcoin charts as well as what's going on with the miners this morning. It is quite an interesting day. For those of you that stick around to the very end, we're going to have a little discussion about interest rates. And welcome back, traders. Let's get right into this. First of all, the Hong Kong ETF is live. You can see all the headlines here, mostly saying that it's a bit of a lukewarm, not super exciting debut, which, if we are remembering the debut of the American ETFs, it was the exact same story. We'll talk about that here in a moment. I would like to show you one thing from CNBC first. I'm not going to go into it, but this is actually just from yesterday. Bitcoin and Ethereum drop as investors question the U.S. economy's strength. That's kind of a very funny title. I mean, if you know what crypto is supposed to be all about, if the U.S. economy is floundering, you should be flocking to Bitcoin and Ethereum. Those are supposed to be the escape. They're supposed to be the answer to the problem, and the problem is government spending and economic failure and all that sort of thing. That's the potential problem. Of course, this is not financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. So this headline in itself is really just false. I mean, if clearly the individuals that are fleeing Bitcoin and Ethereum in the face of a weak U.S. economy don't understand the concept of what Bitcoin and Ethereum are supposed to be, thank you for filling my bags. That's all I have to say about that. I did watch the video. It really was less funny in the content than in the title. But the title says it all. A lot of people read just the title and move on, and they think, oh, well, better sell my Bitcoin. Everybody's doing it. And that's kind of the sentiment they're trying to cultivate. And honestly, I kind of like that because that means I'm going to fill my bags for less money. Let's look at the economic calendar for the week. So right now, today, we had employment costs, Schiller Home Price Index, Chicago Business Barometer, PMI, and consumer confidence is coming out today. None of that's going to really send the market reeling or anything. Tomorrow's the big day, though. Tomorrow's FOMC interest rate decision. Keep that in mind. It's going to be a very rocky and wild day. If you've got anything high risk open, you may want to take a look at that and make sure that the FOMC isn't necessarily going to completely throw a wrench in any of your plans. So keep that in mind. Tomorrow, 2 p.m. is when the interest rate decision comes out, and 2:30 is when J-Pow gets out. Is it going to be another day where the thumbnail has J-Pow's big old boxing glove out there on it or not? I don't know. We'll see. Anyways, let's move on to Bitcoin. Bitcoin, it's a sell-off. We had a sell-off with the Hong Kong ETF. It was a sell the news event. Just like on January 11th. Let's go back there. Actually, it was all the way back here, wasn't it? It was all the way back here. Looks very similar, right? January 11 and 12. This is the day the ETFs started in the US, and this is the day after. How much did we move on that day? Let's see. Those 2 days. This is a 2-day thing. We moved 8.28% down. How far down did we go today? 8.28% was the move. 4.5. So we could move another 4.5%. Let's see, what would it be? 8.28. 8.28 would take us, we'll go 8.5. Take us down to 58,000. That would book us down to $58,000 if it did the same sell-off that we did when the American ETFs started. So keep that in mind. We could move all the way down to $58,000 on this pretty easily. I love how I drew this little box yesterday, and we went right to it. Look at that, just right to the bottom of it, and then came up into the center of it again, which is also the center line of this descending channel. I love technical analysis. It's awesome. Anyways, we could potentially see this flatten out and then come down maybe in the next 2 or 3 days, flash down to like $57,000 for a short period of time, and then rally higher from there. This could happen while we're sleeping, which would be preferable because then my miners won't lose a whole bunch of value all of a sudden and scare the crap out of everyone. But maybe that's a good thing. Maybe I want that so I can buy these things cheaper. Let's take a look at the miners. CleanSpark is not doing super hot today. We're down 3.5% down. We are right on my line here. Look at this. My lines are on point today. Came right up to my line, bounced off my line at $17.21, and we're getting trapped beneath the 50-day moving average here, which is at $17.73. I think we're going to get trapped between the 50 and the 20 here for a little while, so we're going to probably bounce around between 1680 and 17 73 for a little while here until we start getting a new direction. Now, this could be completely undone by the FOMC meeting tomorrow. They could come out and be super, super hawkish, and we see this thing come all the way back down to 15. I don't think that's going to happen. Here's what I think is going to happen. Now, this is all speculative, and I don't know because I don't have a crystal ball, and I'm not able to, predict the future. But I think since I don't think they want to raise interest rates, obviously. Obviously, they can't cut interest rates at this time because inflation is getting out of control. But what they can do is they can come out with a neutral to leaning somewhat hawkish press conference tomorrow, right? And then they can do like they did the last FOMC meeting, where the following week or 2 weeks, they had multiple Feds on deck on the mic every single day, just battering that market if they see the need to. So I think they can stay relatively neutral right now at the meeting, and then if necessary, they can bring out their one of their favorite tools right now. They use that microphone, that third tool they've got in their toolbox, the microphone, and use it like a club against the market and just beat it down with their words. And I think that's likely what we'll see from the Fed, probably a neutral to slightly hawkish meeting coming out tomorrow, and then the following week, depending on how the market reacts, if it doesn't do what they want to do, they'll come out and get on the microphone and start beating that market back down into submission. And then we'll see ourselves potentially drift down a little bit on everything, especially these riskier assets like Bitcoin miners. We might see ourselves coming back to 15 on CleanSpark, maybe even like 16 to 15, somewhere around there. But for now, as long as things stay decent, I can see us floating around between the 20 and the 50 until one of those breaks. Once one of those breaks, if it's the 20 that breaks, we're coming all the way down to about 16 to 15.50, potentially all the way down to $15 again. If it's the 50 that breaks, we're going to come back to the 5 at $18.78, and then eventually back around to the 20s. I was hopeful with yesterday's candle. If you saw my short, I was hopeful with this candle. It had this nice long wick on the bottom. We closed above 18. We stayed above my line down here. That was all looking like a pretty nice, sweet setup. And then obviously it didn't happen. Too bad. Setups are setups. They don't always play out. Let's take a look at Mara. Mara is down 5.16%. We're coming towards that 200-day moving average down here at $16. I feel like Mara wants to touch that 200-day moving average just one more time. It's just like I didn't get enough of the 200-day moving average last time. Just give me a little more 200-day moving average down there at about $16. I think that's what it's looking at. We are getting trapped beneath the 20-day moving average on Marathon Digital. And if we get above it, we'll come to the 5 at 1850, and then we'll come right back up to this orange line here again, and we'll test that. And that will be, if we break above this, that'll be the indication that, hey, we're moving on up from here. Once we see it break above this line and stay there for a few days. Let's take a look at RIOT. How's RIOT doing? RIOT is also down 4.38% today. If you're looking for accumulation, it seems like a pretty good time to be accumulating. Of course, this is not financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. Simply pointing out that we are been in a bit of a downtrend. We got an uptrend. We're on that leg down that could end in a leg higher, potentially an accumulation zone if that is your strategy. Currently, let's see. RIOT is coming up on the 20. I do think we're going to hit the 20 again around $10.12. It's going to act like a magnet. I mean, look how much we're just dropping like a rock towards that 20. It wants that 20. Just like Mara wants the 200, RIOT wants the 20. We'll come back down to it. And then once we hit that 20, we'll see how it interacts. It might bounce off of it. It might come back down to fill this gap around $9.13. But once we turn around, we'll definitely come back and try to go for that 200-day moving average again. I mean, we've already done it twice already. Why not a third time? Why not a third failure at the 200-day moving average? Maybe we'll see. I don't know if it'll be a failure this time. Usually the third tap is the one that breaks through. So hopefully that's what happens next time. And hopefully that's what happens around later in May and June and July. Remember, so April's going to be done after today. May and June are toss-ups. They can be really, really good, or they can be flat. So that's really what we're looking at going into the next few months. Is it going to be excessively boring, or is it going to be exciting leading into a rally that ends in July? I'm kind of leaning towards we might start off a bit boring and flat for most of May, and then we'll start seeing it ramp up real fast towards the end of June. That's what kind of I'm thinking is going to happen, what I'm looking for. Let's take a look at BitDigital. BitDigital is down 4.88% today. It's below all of the moving averages. It wants to touch this megaphone once more. Stop touching the megaphone. Get off that megaphone. Just like go away. Stop it. Okay, I'm done. It's hanging out around there. It wants to go back to that $2 level again. It really is just showing that that's really what it wants to do right now. Bit Digital, if you've looked at short interest lately, it's pretty heavily shorted. Once that squeezes out, though, we'll see a pretty significant move. Once we get done, we touch the $2 again. I think we'll start turning around, later May, June, going into July, and we'll see these SMAs be something beneath us later on, I think. We are in that descending line right now that we need to break out of. Started here, kind of goes like this. Yeah, we need to get above this line right here. Let me turn these off. We need to get above this descending line right here to see this thing go back to $3 right now. That's really what we're looking at, which would be having to fight through the majority of this little box here. So I'll just leave the box on there. That's really just like with yesterday. We got to fight through that. See what is Bitfarms up to? Bitfarms is down 3.17%. Came, came right up, kissed my box, and said, "No, I don't like you," and went up. That's nice. Let's see here. We're below all the SMAs on Bitfarms right now. I think we're going to continue to suffer until they get their CEO figured out. Like, I think we might come back up and hang out just below $2.10 for a while here until they announce a CEO, or they're like, "Hey, guess what? Suddenly we have 10 exahash and we're on our way to 20." And then we'll see that rally come through again on that, I think. But they really need to find that CEO. They really need to announce that new CEO. I mean, I by no means want them to rush it because I want them to choose the correct CEO. But I don't think we're going to see a breakout from kind of this poor price action until they do that announcement and then they start continuing. And then not just that, but then showing that that CEO is absolutely laser focused on achieving their goals for their exahash goals of reaching 20 exahash. All right, that's all I wanted to do. Actually, I want to look at Cipher warrants real quick. I've been looking at the warrants a lot lately. Let's see, where are they at? They're at plus 2% today. I don't love that. It is looking more and more like this could end up being a bear flag. I really want to see it get down to like that 97 to 94 cent range. I'd like to pick up my 1,000 shares down there and ride them back up to, 150, 160 and sell them. That would be fantastic. I'd like to take this ride a third time. That would be wonderful. If not, though, it's not the end of the world or anything. I'll just deal with the fact it didn't happen. That's okay. The warrants, they're getting really interesting. I mean, look how it just keeps coming back to around this box here, somewhere around this box, around 90-ish cents, and then turning around. Just done it once, once, twice, 3 times, 4 times now. Can we get a fifth? Please, can we get a fifth? That would be fantastic. I love making 400 bucks in a couple of days. Great. So let's talk about TMF for a second. So at the beginning of the video, and I probably cut it in later, I said, well, let's have a discussion about interest rates. So I've brought TMF to the channel before, and that was around like 60 bucks, I think, when I was talking about it, and we were thinking that rate cuts were definitely going to come in. This was back when the Fed was saying we're going to see 3 rate cuts this year. Now they're saying we're going to see none. In fact, they're saying we might see a rate hike. Now, I don't think that can happen. I don't think we can see a rate hike. So come on, calm down there. I'm seeing way too much talk about rate hikes. I don't think they're going to do that. That seems a bit excessive. They have a microphone that they're very efficient at beating the crap out of the market with. I don't think they need that at this moment, especially considering that the real interest rate is actually still lower than the Fed rate. So that's something to take into consideration. I do think that this thing is going to, we have reached top in the interest rates for now. Anyways, so we are getting towards the lows on TMF. Now, as I said before, just like with the Russell 2000, this thing cannot go up without interest rates dropping. They have to lower the interest rates for this to go up. Until that happens, this thing's going to find a nice little place to settle, which, this looks like it might be as good a place as any to settle down here. And wait. It might drop a little further into the high 30s for a little while we are waiting. But it's going to sit down here and wait and kind of fluctuate anywhere between $50 and like $38 for a while. Let me draw a box on that. Anywhere between here and here, we're going to see this kind of fluctuate in there until the Fed gives us hope that they are actually going to cut rates, which who knows if we'll even see one this year, especially with talk of raising rates. I don't think that will actually happen, but we might also not see any cuts. Maybe at the very end of the year, but I don't think anytime soon. We're going to have to see some good inflation reports before that happens. So for now, this is kind of a sit and wait and see. This is going to be completely Fed driven, but when it wakes up, it's going to wake up big, and we're probably going to come up to like $100 real fast on this thing when it wakes up. It's not time yet. But let me show you why I don't think that the Fed has the room to raise rates right now in this chart. I don't know if you haven't seen this chart before, it's probably going to be a little bit concerning, especially if you're an American. So this is from the Fed. This is Fred economic data, St. Louis Fed. This chart is, if we highlight this right here, is the federal government current expenditures interest payments. So this is how much money they're paying in interest yearly, like their annual interest, right? And this is measured in billions. So this back here in 1999 was 352 billion. Today, it is $1.059 trillion in interest. That is larger than the Social Security payments. That is larger than the defense budget. This is the largest line item on their budget now, interest. And look where it started. It came down to a low in Q3 2024 at $500 billion, and it more than doubled since 2020. In just 4 years, it more than doubled. In 4 years, this thing went up more than it has in the last 20 years, right? So the previous 20 years, it only went up from 352 billion to about 600 billion, less than a double in 20 years. Then we doubled it from Q3 2020. And now we didn't double it from 2019 where it was pretty high, but in 2020 it was coming down, right? It was coming down in 2020. So since 2020, we have doubled our interest payments. The federal government can't afford to keep doing that. And if the federal government can't afford it, the Federal Reserve of the United States can't keep pushing up the rates. At some point, government's going to break. Now, I know everybody says, oh, they can print endlessly. They're American government. Nobody's going to tell them no. But at some point, this is going to become so overwhelming they just can't continue. At least that's my opinion. I don't think the Fed can raise rates given this particular factor right here, because if the federal government of the United States fails, there's no more Federal Reserve. So there you go. Do I think they're going to fail? No, I don't think they're going to fail. But I also don't think the Fed is going to raise rates. I think they're going to use their other tools to beat down the market instead of raising rates going forward. And I think the next move will be a cut. I just don't know when that will be. So that's all I've got for you today. Please like, comment, and subscribe, and have a profitable day.